It's Friday, it's
Good
12:30 and we are live on Nab An Investor. We come every week, we speak to you about raising money, we talk about what we're seeing in the market. Neil delivers Neil's news every week, so you can keep up to date in what is actually going on in the property market. We're talking to people all the time about investing in property, raising money. So we come, we hop on, and we just talk to you about raising those funds to buy your next or first property and really get that momentum when it comes to growing your property portfolio.
Yeah, building that bank of investors so that you never run out of money again, and obviously as a result you never miss the best deals.
Absolutely, and we are seeing amazing things coming on the market at the moment.
It's like kids in a sweet shop.
So actually, do you know what? The Facebook group is really growing, which was very, very exciting. So we've got 417 people in the Nab An Investor Club, the private Facebook group.
Incredibly, thank you.
Which is fabulous. And so the amount of people that we talk to every single week, the main topic is not actually looking for deals, finding deals, talking to estate agents. It's about how do I raise money. So we know that this is an important topic for all of you out there looking for property.
And what we are finding is it's not a lack of knowledge in many cases. You've got all the knowledge and all the training, got all the information you need to go out and then smash it, but then you get stopped in your tracks because you just haven't got the funds to back up the offers you want to put in.
Absolutely. So we want to help people raise money because we had people help us when we first started all those years ago. 2018 feels like an absolute lifetime ago. Completely different property market, I can tell you, as it is now. But what hasn't changed is if you have your own money and you buy a property, that's it. It's stuck in that property and you cannot move forward. So why use other people's money? We're using other people's money because that means we can scale and grow, we can move at speed, and that also means that we can offer that person something that the banks can't offer, which is a higher return.
Absolutely. So we can make their money grow just by moving it and letting us work with it. And then obviously we get it back to them with their fixed return. And they go booking a holiday or deposit on a car, whatever they want to spend it on.
Indeed. So we're with you for 30 minutes. Hopefully it will be an interesting 30 minutes for you with Neil and I just talking about property and raising money. And we'll share our insights, we'll share things that we have done to raise money. So we had to raise money for our very first property project back in 2018. We entered the market in debt because, probably like many of you, we put all our cash, or not even cash, all of our training fees to become professional property investors. We put all our training fees on credit cards, which meant that we didn't have a deposit. We went in with minus amounts of money, but we were still able to raise money, to raise funds, and we were able to get that first investment property in our portfolio. And then we just built the process up from there, raising money, buying a house, raising money, buying a house. We have just a small bank of investors who we raise funds from, but it has enabled us to grow a multi-million pound portfolio. So the stuff that we're sharing with you works. The stuff that we share within our Nab An Investor membership, it works. We've had amazing results. We've got people networking like crazy, following up on their contacts, raising hundreds of thousands of pounds, which is utterly amazing and very, very exciting. And it just gives people the momentum to carry on going and to realise that it is possible. And that's why we're here and sharing information with you today.
Yeah, and I think you touched on it there. Really, a lot of it is about self-belief and mindset. You know, you've got to believe that you're worthy of using someone else's money, and you've got to believe that the system and the processes that we put in place and we teach people to follow really works, and we're testament to that. Our whole portfolio has been built on other people's funds, and these people don't want their money back because they don't want that trickle of money dropping their own account every month ever to stop. So it really is building win-win situations and working together for long term. And like Jackie said, we've got a bank of investors now that just keep coming back to say, do it again. Can you use my money? Please use my money. It grows lovely when you've got it. So it's definitely, the system works, the process works. You've got to believe it. 2018, did we deep down believe that someone would ever lend us their money?
Never, very sceptical.
No, but if we hadn't have pursued it and kept going, we'd have never got started.
What other choice did we have?
So yeah, as you mentioned, we're in debt. So the only way we could get this property business going, or adventures as we call it, our property adventures, was to utilise other people's money. And now, even if we got the funds in the bank, that stays there. We use that as proof of funds and then go looking for someone else's money to buy the property. So
absolutely,
stick with it. Keep believing, it works.
Absolutely. So just so you know what's going to happen in this segment today is Neil will be delivering Neil's news, as he always does, which is a real insight into what's going on in the property market. Neil keeps a really tight eye in what is going on in auctions as well. We've been out viewing this week. There's been some amazing properties that we've seen this week.
Yeah.
We've got our network as well. They're showing us what they're viewing. There are some proper crackers on the market at the moment, and it's a buyer's market.
Opportunities everywhere.
So yeah, there is opportunity. And the reason why we do Nab An Investor is because we want you guys to be prepared for when you find that perfect deal, that you're ready. You can move really, really quickly. You've already started having conversations with potential investors, potential funders. And so that means that because the conversations have already been had, that means that you're in a position where you can put the deal by proposal, please build your proposals, but put the deal in front of your potential investor, and then it can be a yes or no, but to just have a bank of people, because it's not always great timing for your funders, because as we know, life happens. Sometimes they get the wobbles, but so that's why we want maybe a handful of people who are having constant follow-up conversations with.
Yeah.
We know that they're ready. We've already made those relationships. We've already qualified them. That's the key to it, is qualifying people to make sure that they're not just paying lip service to being investors, because a lot of people do that.
Yeah, when it comes to crunch, they tend to back down.
But we've already qualified them. So when we need to say, okay, we're going to put, the hammer's going down on an auction property, we need to act fast, they're already there. They're already primed and they're ready to go. That's why we're doing two things at once, looking for deals, looking for money in tandem.
And that really backs up one of our strategies, which is auction. We buy pre, during and post auction, and having the funds there gives us a confidence to put those offers on where they work for our business, and knowing that we can see the process through, we can complete within the 28 days, because we've got all our time and our funds in place before we put the offer in. So it is very much making sure that you've got all your ducks in a row before you get out there. Good afternoon to Craig and Gary.
Yeah,
thanks for joining us.
We've got regular viewers now. This is really exciting.
So, and if you're watching on replay, please put in the comments #replay, and then we know. That'd be awesome.
Brilliant. I get really excited about this topic because not many people actually, in the property world, we coach a lot of people, and not a lot of training organisations actually really go deep dive into raising money. And it's more than, just having a bit of paper, because, us human beings, we worry a lot. We have deep-seated concerns. We lack confidence when it comes to raising money because of the way that we've been brought up, the way that we've been educated. I mean, I don't know if you've ever been told around the dinner table, if someone asks about, how much does he, and then go, that's rude, don't ask that question. Nobody speaks about money in our homes.
Do you know what? I was networking yesterday.
Golf, that means.
On the golf course. With a bunch of gentlemen. We play every year as a memorial to a good friend of ours. So there's 12 of us, and a couple I hadn't met before asked me what I do. So I just said, well, I buy dirty, horrible, grubby properties with other people's money, fix them up and rent them out. And instantly 2 people perked up and said, what sort of returns do you offer? So I said, well, 6%. And they said, I'm getting 2.1 on my ISA.
There we go. Simple conversation.
Yeah, then book in a follow-up conversation, a coffee or whatever, and then talk a bit deeper. So I didn't go deep into it yesterday, because around the table, just sharing, having a bit of a laugh and sharing some memories. But always drop into conversation. TTP. Where did we learn that from?
Mr. Mark Dalton.
TTP, Mr. Dalton, yeah.
I feel like I'm one of Mark's disciples.
Talk to people, because believe me, they are interested. Never believe they're not interested.
Absolutely.
And if they can see their money's growing for very little work, they'll want to know more.
Yeah, they will indeed. They will indeed. Inside Nab An Investor Club, the private Facebook group, which is where we're broadcasting into right now, I put in daily questions, motivational little bits and pieces, so we can gauge, the thoughts of the members. And I've actually had quite a bit of traction, and particularly on objections that they're getting when they're having a conversation with investors. But what is amazing is that they are having those conversations with investors to get those objections. So that is just brilliant, because that means that they've got momentum. Love it. So we'll be going over
we've got some real success stories as well, people raising lots of money.
We'll be going over the objections, the questions that keep coming up, and also the way to answer them, because a lot of it shouldn't stop you in your tracks if people throw an objection. It just means that they're interested, but for whatever reason, an answer or a fear of theirs hasn't been answered. So it's not the fact that they're not interested, it's just that they are literally, they want to discover more. They want to feel confident and at ease with what you're offering and what you are, what you're doing with the project.
You are, and you're basically trying to quash that question that's going on in their mind, is, will I regret getting into this? And basically, if your proposal's done well, you'll mitigate all those questions by them absorbing your proposal. So it's vitally important. That is your golden ticket, really, is your proposal. It's definitely a like, know and trust model. Don't get me wrong. People have got to like you, know you and trust you. But then you're presenting this golden ticket which mitigates all their objections and quashes them and gives them the confidence to say, hang on, let's get serious about that. Let's do something together.
I'm loving the proposal build. It's so brilliant when we start building the proposals with our members.
Just talk through the process of the build, because you build them for other people now.
Oh my goodness, it's just brilliant.
Good afternoon, Catherine. Thanks for joining us.
The transition that I see when we're helping people to build their proposals. Yeah, going from what they think they know to then moving them to what they actually know. So they have this, I'm going to call it a journey of discovery. Sounds a little bit twee, but it really is, because they discover a lot more about themselves and why they're worthy of someone actually investing in them, and they learn so much about the deal as well on actually just writing the proposal. So not only do you end up with this fabulous business plan that you can put in front of anyone, and this includes not just like a private funder, but also something you could go to the bank. As we scale and grow, we need to be doing this properly, and my ethos is very much do it well and do it properly from day one, even if it's your auntie. Treat them like you don't know them. Treat them like they're a business partner, and it will see you through from buying that first property to scaling a portfolio.
All intents and purposes, it is your business plan that you're presenting to them. So you've got to treat it like that. Every business, whatever business you're setting up, whether it's property, as we did, we set up a 1940s tea room a number of years ago. You have to write it was a bit random. It was a natural progression from motor trade to 1940s tea room, but it worked. We made a good success and sold it 5 years later. But we had to build a business plan and present it to the bank, because we needed funds to get it off the ground. So this is all you're doing. Your property business, you need funds to get it off the ground. And
absolutely.
what better than private funds, because it's cheaper than the banks.
Yes, it is. Actually, that's very good, because I like that little segue, because
Mr. Tucker's joined us.
Yes. Hi, Andy. Amazing. And Catherine. Hello, Catherine. So, questions that have been thrown up, the objections that have been thrown up, where people have been having meetings, which is fabulous. Love that so much. Let's get stuck into the questions. So, I have answered some of these. I know that Craig sent in an objection, and I have answered it for you. There was a few during the week, so I've done them all this morning. But we have questions, and Andy actually, he came across an objection as well, which he was asked. So the first one is, what happens if it all goes wrong?
It won't go.
The likelihood of that isn't.
It won't go wrong, because you've done your due diligence. You've made sure you've got 2 exit strategies on any deal. So going wrong, it can not go according to plan, but I don't believe it can go disastrously wrong. Is that the right? Yeah.
Yes, that's a good word. You sound like me now, getting your words wrong.
Well, perhaps I've... Oh, hang on. Doorbell's gone.
I'll go.
This is live, isn't it? So, yeah, I mean, ultimately, you do your due diligence, you do your numbers, you don't fudge them, you don't over-egg them, you make sure we at the moment, we're certainly erring on the side of caution, and we're being very conservative about our numbers, because the market is in a funny old place at the moment. We keep thinking it's going to turn a corner, but a bit of my news in a bit is about, the breakdown of the ceasefire in the Middle East, which has a huge impact. Everything that goes on in the world has a huge impact on what goes on in the UK property market. So basically, it's about your knowledge and keeping abreast of the market as a whole, and looking at history and looking at future predictions from the big boys, the likes of Savills, Nationwide, Halifax, etc. So yeah, it's just making sure that you're in the loop the whole time, and you know what's going on in the world and the property market, and then doing your numbers accordingly. So things don't always go according to plan, but I don't believe they'll ever go disastrously wrong.
Yeah, for me, it was the word all. What if it all goes wrong? It won't all.
It won't. Your primary strategy might change, but there's always that safety net. So we make sure we've got 2 exits, at least 2 exits for every deal we put together.
Yeah. I mean, we have teams of professionals that help us, and so we know that it won't all go wrong.
No, our first ever deal was a flip. It was always intended to be a flip, and we got such a good revaluation, and the market changed slightly because the refurb took longer than we expected. We did a lot wrong on the first deal. Let's get it, let's not be, let's beat around the bush. We didn't get everything right on the first deal, but the market changed and played right in our hands. So we refinanced, kept it, got all our money out, and rented it out for 8 years, more or less, 7 years. Yeah. With great returns, and we sold it last year because we only bought that one in our own name, so it's no longer tax efficient. So redeployed the money. So yeah, it's about making sure that you've got the safety net.
Absolutely, yeah. So all about due diligence, and that is your investor proposal, because when you go through that, you know exactly what you've gone from it from every single angle. Like Neil was saying, you've done all your due diligence. So the next one, and this was actually Craig, who's on the call, he put in the group, I've had people ask him that I'd rather do a JV with you instead.
They're very different things. A JV and private funding are very, very different things, but they do get brandished about in the same breath.
Yes. Well, how would you answer that if someone said you're raising money, but someone says I'd rather do a JV?
Well, actually, let's start further back than that. First of all, can you work with that person? We've had people offer us a lot of money, but they wanted to get too involved, so we declined their money. You don't burn the bridges. You say, we don't think this deal's right for you at this moment. So you keep them on the back burner, but you've got to enjoy the process. So whatever you do, don't just take the money for the sake of taking the money, because 2 things that we found doing joint ventures especially is people change. And the 2 things that what changes people predominantly is money and workload. And there's a lot of people who you think you know very well that become work shy. And there's a lot of people that actually, once you're in the deal, think that they're worth more or should get more than you set out at the outset. So it's, again, you've got to know who you're working with inside out and do some real groundwork on them, which you should do anyway if you're borrowing anybody's money. But the question really is, how involved do you want to be? Do you just want your money to grow for doing nothing? Or do you want to be part of the deal and put out heads of terms? You know what you've got to do. We know what we've got to do. And we're both working towards the same exit. So I'm a bit more reluctant to do joint ventures anymore.
I agree.
We've done quite a few, and a couple have been painful. We've always got out on the right side, but the whole process has been so painful and so unenjoyable. And you know, if you want to have an unenjoyable job, go and do your 40 hours a week for somebody else. We're doing this because we enjoy it, and we don't want anybody to drag us down or get in our way from enjoying it. And so yeah, it's very much, I would say, lend me your money and I'll give you it back with a bit more.
So the way I would respond would be that I'm not looking to work with everybody that I have a conversation with. That the person, you know, if we're going to venture into a joint venture agreement, then I need to make sure that we are the right fit, that our values align. You know, we have to get to know each other first. The deal that you're actually looking at may not be one for a JV because the profits might not be there. So there's lots of reasons you can respond with, you know, this deal isn't right for a JV. I'm just looking to raise the money. But yeah, as Neil said, don't burn bridges. Keep that door open and just say if something comes up in the future, then you know I'll let you know the one that's right for a JV, because one, not every deal is right for a joint venture because the profit or the income is not going to be there. And you do want to get to know who your JV partner is. So you want a proper relationship with them. You know, people that you want to spend time with, because you will end up spending a lot of time with them. So you want, as Neil was saying, the whole process to be really enjoyable. You want to, you know, you want to be able to have a giggle. You know their family. You can spend afternoons with them, and that's what we do. So that's when you naturally start to JV, because you understand, you know, everything about that person, the way they live their life, the way they do business, and it just naturally goes into a JV rather than one, you know, that we see where people have met each other just a couple of times. And
if you're doing, say, single lets, I mean, let's face it, the cash flow at the moment doesn't stand a JV partner, does it? If you said to a joint venture partner, yeah, let's do a deal, let's do a single let, and you can have £100 a month at the end of it, they're going to, that's a lot of work.
Yeah.
But if you say, well, you lend me your money, I'll give you £6,000 in 12 months.
For doing nothing. You can sort of guide them to the outcome that you want, really. Yeah. So it's not scary to think. You'll find that when you come at people, you know, throw objections at you, you feel like you have to justify yourself, but actually turn it on its head and, you know, agree with them. Yeah, why would you? You need to do a lot more investigation, a lot more groundwork before you enter into that sort of agreement. So it's okay to actually turn it around on the other person and go like, yeah, I may not want to JV with you either. It's fine. So you can push them away and they'll be a bit like, oh, taken back. Because we're protecting ourselves. We want to be in control of the conversation, not put all of that control over to the other person where they feel like they've got the upper hand. It's actually, you know, this is a two-way conversation. I need to find out if you're a fit for me as well as they're a fit, you know, you're a fit for them.
And ultimately you're running a business and it's your business, not somebody else's, so you want to make sure that you're in control all the time.
Absolutely.
So we're big on the news. You see the time, it's flying.
I know. So I was just going to say that actually. So we've answered the questions that have come in Facebook. There's just one more actually, but we'll do that after the news. So if you want to get on with Neil's news.
Yes, well, as I alluded to a bit earlier, the breakdown of the ceasefire in the Middle East is already starting to show signs of impact. I mean, here on a personal level, our heating oil shot up again. I nearly ordered it a week ago.
It was really low.
And being an optimist, I think, that'll hold and it'll come down a bit more.
That means that oil shares are going to go up, so maybe I might purchase a couple.
Oh, here we go. So yeah, multiple streams of income. That's what that alludes to, isn't it? So yes, but as a result, there was talk about an interest rate cut at the next sitting, but now they're saying that they're probably going to be held at 3.75%. So that's a bit disappointing all round, really, because we'd get better mortgage rates, plus our private funders will be earning less in the bank, so they'll be more inclined to plant more with us.
Amazing.
Excellent. Yeah, absolutely. So what else have we got here? House prices. House prices have completely stalled in the first week of July. And that's off the back of a 0.6% drop during June. So it doesn't sound a lot, 0.6%, but it's quite significant in the house market. So that's another statistic that really is quite shocking and for others, but playing right into our hands. So there's lots of deals out there and there's lots of motivated vendors, I can tell you. But one thing I didn't mention is the mortgage rates. The products have put their rates up, the lenders, and now a 2-year fixed mortgage is sitting around, the average is 5.53%. So again, it's getting more and more expensive to borrow the money, so more and more reason to go out looking for private funding and go through the processes with the mindset that at the end of the process the rates might come down and the money could be cheaper to borrow to go onto a mortgage once you've been through the whole process and you're ready to refinance. So yeah, I'd try and purchase everything with outright cash to try and avoid the bridging rates, and obviously rather than going straight onto an interest only mortgage. This is an astounding fact. 60% of all the properties listed for sale in January still remain unsold on the market. 60%. Boom.
Amazing.
That's another Mark Daltonism, isn't it? Boom.
That really is.
Yeah.
Do you know what? That just plays into our hands so well. Okay.
That's straight through from Rightmove statistics there. So 60% of all properties listed for sale in January remain unsold and on the market. So people haven't changed their minds, they're still trying to sell them. So they're going to get, and if you look at the history since it's been listed for sale, how many times it's gone sold subject to contract and then come back on the market, they're the ones you target because the vendors will be more and more motivated to sell. A lot of that is due to unrealistic listings prices, which is generally driven by the vendor, not the estate agent. We all, badmouth the agents, but they can only, they're governed by the vendors. They're the ones that really will put them out on the market overpriced because everybody thinks their house is worth more than everybody else's. Just going on to the rental side of things, there's a lot of fear. This has come from the NRLA. There's a lot of fears about revenge rent rises, and this is being put down to the fact that the Section 21 no-fault eviction was removed as part of the Renters' Rights Act. So what they're saying now, the landlords are putting their rents up excessively to try and force those people out through unaffordability. Oh. So obviously there could be a backlash. They can challenge it and take it to is it the ombudsman, isn't it?
Yeah.
But how many people are going to go through that process, or even aware they can go through that process? So I don't agree with it. I mean, as long as our tenants aren't causing us too much grief, we stick with them. We're very fair. We go market rent. We put it up every year by whatever the market dictates. In fact, we've actually left one as it is recently because in the area the rent hadn't gone up, so we let it be. But yeah, so there's always going to be backlash from this Renters' Rights Act because they don't want us little landlords anyway, do they? The government ultimately, but there's ways around everything. I mean, this like the the non-payment of rent. You can now get 3 months behind before you can challenge it. So we just put rent guarantee insurance on it to mitigate that risk. So there's ways around everything, and unfortunately, the more they do, the only people that are really losing out is the tenants in the long run, because they're, our rent guarantee insurance now, we put the rent up to cover the insurance, so they're paying more. So because we're running a business, and why should it cost us? So it's the Renters' Rights Act doesn't faze us at all, but we do have to make sure we mitigate the risks as a result of what's going on within it. But so yeah, that's a bit. House prices dipped 0.6% June. So yeah, that's Neil's news.
Brilliant.
In a nutshell.
Just the 60% of properties unsold since January. Crazy.
Well, actually, that reflected in the last auction. I don't know how many people online or watch this later actually are as dull as me, and I sit and watch the whole online auction all day. But the last auction, there was approximately 150 lots available about 3 days before the auction, but a huge number of those were withdrawn prior. Couple of reasons for that. One is the legal pack isn't prepared on time, but the majority, because I have a close relationship with one of the ladies at the auction house that we deal with, the main one was it had no viewings, no one registered to bid, so there's no point putting it through the auction. And again, that's when we keep an eye on them, see how many times they're put forward for auction but don't actually go through, and we can go in and offer without it actually going in the auction. And we've had a fair amount of success in the past with that.
Absolutely.
Doing pre and post auction bids.
And we will continue. So what's the time? I think we're pretty much done. Okay. Amazing. Thank you guys for coming and spending.
I do look like I've been in the sun for 2 days, don't I?
It's been amazing. There's always stuff going on in the markets. It is, property investing, it is a changing landscape. Rentals, flips, whatever you're doing, service accommodation, it is changing all the time. New legislation, new tax rules, the market changes, interest rates ups and downs. But if you have got your ear to the ground and you understand how it's moving and how we can benefit from it and how we can mitigate risk, this is how you scale and grow your own property portfolio. You make a success of being a property
absolutely
investor.
Stay in the loop, mix with the right people, mix with people that are a few steps ahead of you, and just keep abreast of what's going on so that you're bang up to date at all times. Yeah,
brilliant. Thank you so much for coming. We'll be back next Friday. We'll have updates for you. If you need us, let us know. Get involved in the Facebook group. Just come and hop on, say hello. If you've got questions, stick it in the Facebook group. That'd be amazing. And we'll see you all next week. Thank you guys so much.
Have a great weekend.